So guys, it's been a while. I'm happy to see you guys once again. And this strategy you're about to watch is a strategy that we used to trade, boom, and crash. But this will be a little bit different from what we were doing before or in my previous video, because this one we're going to be using indicators. So I want you to watch this video, stay with this video, watch, learn, and earn. You understand? That's what I want. And if you have any question, any contribution, anything you would like to say, please feel free to say that in the comment section. And also, if you have not subscribed to our wonderful channel, please do so you, and make sure you on the notification bell so you get notified whenever we upload a new video. So thank you. Watch, learn, and earn. So this, to know our time frame we use to get our trend is 5 minutes to 30 minutes. Yeah, 5 minutes to 30 minutes. That's what we're going to use to analyze, to know the trend, because it's the trend we're going to first of all determine before we use the strategy. And the first thing that your trend is supposed to be downtrend. So I'm going to look for, in our previous chart where we have downtrend. Now look at this. From this point, so I think this is pretty a very good example of a downtrend here. Let's look from this point here, from this point down to this point. You can see it's a downtrend. You understand? So I want to mark it from here to this point here. It's a downtrend. So now I want to reduce it now to 15 minutes. 15 minutes. Okay, you can see downtrend. We are having a lower low and a lower high. See it? Lower low, lower high, lower low, lower high, and that's it. So before we add our indicator actually, it's one that we're going to use. Very good. This is very good. And now we're going to place now a trade. We're going to using 1 minute. It's 1 minute time frame to place this trade. It's 1 minute time frame I'm going to use. So it's fine. Okay, this is where we mark. I'm going to start where the downtrend started. So now if you want to add the indicator using, actually this is a laptop, you go to insert, click insert, so you see indicators. Under B Williams, go to add our indicator. And what we're going to use for this strategy is a Awesome Oscillator. So now this is the parameter. Now this parameter is very, very important. It's very careful, depending on what you use here, depending on what you use as your bullish candle and your bearish candle. A bullish candle here, the color is green. On my bearish candle, the color is red. It depends on your choice. Maybe your bullish is black or your bearish is white, depending. So you need to change the color according to it. So here my bullish is blue, that's why my value up is green. My bullish is green, my value up is green, while my bearish is red, that's why my value down is red. If yours is different, you can change it to, if yours is maybe the bullish is white, you change your value up to white, and your bearish is black, you change your value down to black. We're going to leave the level, the scale, the visualization the same. You understand? This is just, let me increase it to this and click OK. See it to appear. Very good. So now If you not be listening, please listen very carefully. This is very simple and this is very easy. So this is our below here, this area now, this is our indicator we added, Awesome Oscillator. Understand? So now our value up here is green and our value down is red. This is very simple now. So whenever our value up here is green, meaning after a spike, normally for boom 1000 and boom 500, after a spike a bearish candle follows. You understand? Now as our value up is green, it means that spike, that means it buys up, it spikes upwards. It means that buyers are into the market. That's why as it spikes at this point here, you can see here we have value up bars formed in our indicator here. You understand? It means that buyers are in the market, taking over the market. Then when we are seeing a value down color, that is red, forming, it means sellers are taking the market. So now let's observe from this point now. Look at here now, it spikes up. I see buyers took the market. After, it was still selling, but still our value up was still green. We did not place any trade. Don't place any trade. It spikes up again. It was still green. Then once it changes to red, that is when you place your trade. And it's a sell trade. And this strategy we are going is still a scalping strategy. You understand? Please understand me. Follow me very, very closely. Please look. Look at this now. At this point, it spikes upwards, and we have our value up bars is being formed. It begins to sell again. You don't place any trade because what, we are still having value up bars still forming. Then once it changes from these are bars, they change from green to red. That is a signal that you need to place trade, and you place a trade here now. Do you understand? That is how you trade. That is simple as that. Once the value up, once the bar change from value up to value down, which is our red, you place your trade. Look at here now, it spikes up, buyers in the market. Once it changes from green to red, you can see here now, it sells. You place your trade, enter your trade. I see now. I'm just showing you entry. I will still also show you when to exit. So look at here now, it spikes up, value up, still form, and look at it now, it changes from green to red, and you see you place your trade. That's how we trade, as simple as that. Look at this place now, it spikes up, buyers in the market. It was still forming value up bars because buyers are still in control, they're not sure. But once it changes from green to red, sellers have taken over, and you place your sell trade, and that's it. As simple as that. As simple as that. If you observe, that is how it has been working. As simple as that. And to exit this market now, in our previous videos, the rule there was that you just trade only one candlestick and leave it, which is approximately 50 to 70 pips. But this now we're trading 100 pips. Yes, you leave the market with 100 pips. Meaning, let's assume now, at this point here now, let me zoom in. Look at this place very closely now. It forms, it spikes upwards, and these are value up, and now changes from green to red. You place your trade here. 100 pips here I'm talking about is a bit difficult to calculate using normal pips, but just know that maybe if you use 10 lot size to place a sell trade here now, once your profit amounts to $10, that is approximately 100 pips, you exit the market. That is it. That is, you exit the market. As simple as that. Even though you use one lot size, once your profit amounts to $1, you exit the market. That is 100 pips, and that's all. That's all you need to know about this strategy. It's very simple. First thing to know is to make sure it's a downtrend, so that in case you are caught up in a spike, maybe you forgot to close the market after 100 pips, the market will still retrace back to your entry point. Maybe it changed from here. Like now, look at this place now. Let me look for a perfect example. Here now, look at this place now. It changes from green to red, and you place a sell order here now. Maybe you forgot to close the trade, and a spike caught you up here now. You can see it sold down back to your entry point and also crossed it, and also made profit, because it's what the downtrend. The downtrend is always better to trade using strategy for Boom 1000. So I believe you all understood this. If you have any question, please don't hesitate to answer. That is it. It's a downtrend. Once it's downtrend, you put your indicators by going to insert indicators under BunmiLyon section. You Awesome Oscillator, you open it and make sure you change your bearish. If your bearish candle is red, you put red here as a value up. So bullish candle is black, you put black here. Click OK, and that's it. It will appear here, and once your value up that is red change to black, you sell, and after 100 pips you exit the market. 100 pips here, I mean, if you're using 5 lot size, once your profit amounts to $5, you're out of the market. And that's all for this strategy.